All right, good afternoon, folks. This is your free video update from Seasonal Swing Trader. Today is Friday, January 4th, 2019. Huge day for the markets to the upside. Currently, we're up 80 points or 3.25%. We've got a new 1, 2, 3 confirmation bottom signal for our 3S code here on the S&P. This new low here at 24.77, followed by a rise up to 25.23. A retracement back down to 24.28, and now we are currently breaking that level and also breaking this short-term downtrend line. Is that a signal to buy? Possibly. We will take it with a grain of salt considering all the news that are affecting the markets at this time and the exceptional volatility that we're experiencing. However, there are a handful of trades from a seasonal perspective coupled with a possible buying opportunity, and one of those is FedX. Ticker symbol FDX. Everybody's familiar with FDX. Currently trading at 164.05, up $6.85, or almost 4.5% for the day. FedEx got slaughtered on earnings back in mid-December, but now it looks like we are attempting to find a bottom formation. Now, the 3S code high-low scanner has flagged this trade on a break here above the 163.80 level, or 164, with a target up here of around 175. Seasonally, over the past 40 years of data, FedEx has risen approximately 3% over the next 8 weeks. So we're looking for a potential buying opportunity. A couple things we want to look at aside from the seasonal data is if we look down here at the RSI, we'll notice that we came down here on Christmas Eve, made a low, and then on the day after Christmas, when we had the surge in the market, we actually made a new low at 150.95, but we printed a higher RSI. The RSI on the 24th was around 5.5. These lows over here were 5.79. And then the lows back here in October were actually 5.35. So we have a little bit of divergence here, and you can see we're starting to print higher down there on that indicator. Now, I don't really rely on that solely. I do like it as kind of additional confirmation to my analysis. If we look at a weekly chart, we like to go back and find areas of support if we're looking to go long. Have we been down here at these levels before? And yes, we have. We've come down here at these levels before. And then what we can do is draw a Fibonacci retracement from that last major swing low to this last major swing high, and we're getting a perfect 786 retracement down here at the 152 half level. So notice we came down here, tagged the 786, which is prior support, reversed, and it looks like we're going back higher. Notice too that per our 3S code indicator, it puts the target back up here at the 618 level. So those are all good signs in our favor if we're looking to go long. Now, if we're looking at FedEx, we might as well look at UPS. UPS, having a very similar pattern shaping, has not quite had a confirmation trigger. I suspect it will do so if the market continues higher into next week. But a couple of things. One, I'm going to stay away from this personally due to earnings. We have pending earnings here at the end of the month. Do not like to trade in front of earnings, so that alone would take this off my list. Secondly, I told you that FedEx had positive seasonal bias over the next 8 weeks into the tune of approximately 3%. On the flip side, if we look at UPS's seasonality, UPS has fallen approximately 4.3% over the next 8 weeks. Why does FedEx historically rise at this time and UPS historically fall at this time? That I do not know. But we do know the statistics, and we do have the charts and the price action in front of us, and that is why I would favor a trade of FDX over UPS at this time. So until next time, good trading. Hope it helps, and we'll see you on the next update. Traders, like what you see, want more trade ideas each week? Take a $7 30-day complete member access trial by clicking the link below. You'll have immediate access to analysis and seasonal trade ideas on over 35 commodity and currency futures markets, as well as coverage on all of the major stocks, exchanges, and ETFs in the U.S. marketplace. If you like us, follow us on Twitter and Facebook, like us on YouTube, and we hope to see you on the inside.